Hello and good day to all the viewers. I'm Rizwan and I welcome you all to IDLC's third quarter earnings disclosure session. Let me quickly introduce you to our panel. We have with us our CEO and Managing Director, Mr. M. Jamaluddin, our Deputy Managing Director, Mr. Syed Javed Noor, our Group CFO, Mr. Masud Karim Majumdar. I'd request you all to wait till the end of the session. We will have a question and answer session in the last segment of the program. If you have any question, please log in to post them. Without any further delay, I'd like to request Jamal Bhai to open the session with a few words.
Thank you, Rizwan. Hello, good day to everyone watching from around the world. I would like to welcome you all to IDLC's earnings disclosure session. We are going to take a look at our third quarter performance of 2022. Following a tentative recovery in 2021, the global economy is experiencing a slowdown of growth owing to conflicts in Europe and its effects on commodity markets, supply chains, inflation, and financial conditions. The spillover of the global economic constraints is also evident in Bangladesh. At the backdrop of this, the government of Bangladesh has been actively working to tackle the challenges posed by the currently economic conditions while continuing positive growth. Some highlights of our economic performances are year-on-year private sector credit growth rose to 13.93% in September 2022 compared to 13.66% in June 2022. Meanwhile, year-on-year deposit grew by 7.53% in August 2022 compared to 8.90% in June 2021. Import grew by 16.96% to register USD 12.69 billion in the first 2 months of fiscal year 2022-23. Export increased by 13.38% in first 3 months of fiscal year 23 to register USD $12.5 billion. In addition to this, periodic depreciation of BDT against USD contributed to the volatility of the financial market in Q3 of 2022. This resultantly inflicted a visible pressure on the market liquidity and interest rates. On the capital market front, after 5.6% correction in first half of year 2022, DSX increased by 2.1% in Q3 2022, resulting in a 3.6% correction during the first 9 months of 2022. Daily average turnover in this period of 2022 stood at about BDT 10.4 billion. Under this context, IDLC achieved a profit of BDT 1,311 million in the third quarter of 2022 against same period of the previous year. Resultantly, our annualized return on assets stood at 1.27% and annualized return on equity stood at 10.19%. Looking at our core lending business, our overall loan portfolio saw a growth of 14.3% in this challenging environment compared to the December 2021. However, the volatile capital market scenario and overall downward trend this year reflected on the downturn of the profitability of the subsidiaries. Going forward, we will closely monitor the scenario and gauge its impact on the country and IDLC and take appropriate steps. For our financial vertical, our efforts were more focused on maintaining the quality of the portfolio, collection and non-performing loan management though our NPL has slightly increased. We will continue to strengthen the liquidity buffer and seek sustainable portfolio growth. Additionally, our aim is to strengthen our distribution network and focus on process automation as well as enhance our product basket. But last but not the least, we aim to further invest towards meeting our community objectives. Now our DMD, Syed Javed Noor, and our Group CFO, Masud Karim Majumdar, will take you through the highlights of the period. Javed, over to you.
Thank you, Jamal Bhai. Thank you for your nice briefing about our economy and the overall performance of IDLC. So what we have done is basically, since we operate in two verticals, one is our core lending business, the other one is the capital market subsidies. So first, we'd like to take you through the operating environment, both for core lending business and our capital market business. In the core lending business, what Shyamal Bhai has already advised you, the import has grown at a much higher rate than the export. The import base was slightly larger than the export base. As a result, what we have seen that the current account deficit has basically resulted in current account deficit. So if you look at the absolute numbers in the first 2 months, the import registered around 12.7 billion, while in the first 3 months, a month higher, the export reached to $12.5 billion. However, we've experienced lower export in comparison to September 2021. In September 2022, around 6.25% downward trend, and it's because of the inflations in the consumer market where we supply our export goods. What we're also experiencing that due to the higher import in the last few quarters, the LC settlement has increased a lot. It has reached around $15 billion plus in July-August period, which is a whopping 42% increase. However, the good news is that the LC opening has dropped a bit with a strict measure by the central bank and the initiatives from different quarters of the government. The import LC opening trend has almost flattened in comparison to the last year. While the import and export has grown a bit, we have seen the remittances has grown at a sluggish rate for the first quarter of 2023, I would say July-September period. It reached to $5.6 billion. However, again, with the other trends of export, we've seen the September remittances has dropped. It has gone down to 1.53%, which is basically around 4.89% lower than last year. However, if you compare it with August, it is down by around 25%. Because of the above, the trade balance gap has reached to $4.5 billion, and the current account balance is deficit was around $1.5 billion current account. If you look at 2022, the current account balance deficit was around $18.7 billion. However, looking at the trend, it seems it's sliding at a slower rate. Central bank continued to inject US dollar into the market to support the import bill payments. However, this has resulted into mopping up of liquidity of around 460 billion taka. And government's net borrowing stood at around $28.5 billion. If you continue with the local operating environment, what we've seen in the money market, because of mopping up of liquidity by the central bank, the money market has experienced an upward trend. The call money rate has increased up to 5.57 level, while the policy rate has increased to 5.75%. So the interbank market higher rate is not going to go away soon. The credit growth was around 14%, and while deposit growth was around 7.5%. If you look at the inflation, the point-to-point inflation in September 22 was around 9.1%, while 12-month average was around 7% up till September 2022. So this inflation is because of all the rise in commodity prices and the liquidity tightening in the market. So if you look at the trend of deposit, because of mopping up liquidity by the central bank, there is there is a dearth of liquidity in the market, and what we have seen, despite having floor for most of the banks, are offering much higher rate from the floor. However, with the intervention of the central bank, what we have seen, the yields on the government securities has remained almost flat. And what we have done because of the central bank directive, the NBFIs, including us, has put in a cap of deposit rate at 7%, while the maximum lending rate can be around 11%. This has dented our profitability a lot. So if you look at the capital market, I would say the biggest thing that has happened in the last quarter, the Commission imposed floor price for all stock with effect from 31st of July. And the index was down below 6,000 level. With this intervention, the index has recovered, and at the end of quarter 3, it was around 6,500 level. However, the market was down in first of 2022. With this intervention in the third quarter, it has increased a bit. However, overall in 2022, up till 9 months, we have seen 3.6% correction of the index. And if you look at the daily turnover for the 9 month, it was 29% down from the same period of 2021, and Q3 average daily turnover was around 12.2 billion, which was $9.5 billion taka in the first quarter, which is around 28% higher. With this intervention from SEC, it seems the market is a bit stabilized, but again, not sure how long this can sustain. The volatility of the stock market is because of the higher inflationary environment stemming from the higher commodity prices and taka depreciation. And as you're aware, the central bank has mopped up liquidity from the system. Resultantly, we have seen liquidity pressure, which has basically lowered the flow of money into the stock market. And also, in general, there is a confidence issue with declining foreign reserve and global volatility in the global economy. What BSEC has recently done to raise the bar for the qualified investors, they've raised their minimum investment criteria from 20 million to 30 million taka. So amid this challenging environment, the NPAT for IDLC Finance on a standalone basis has dropped a bit from the same quarter last year. From up to the same quarter last year, we were just above $1 billion, which is around 8% down from last year. NPAT on a consolidated basis is down a bit higher because of lower performance in the stock market. I would say the volatility in the stock market. So it's around $1.3 billion, I guess, as against $1.5 billion taka last year. Because of the liquidity crisis, we managed our books pretty well. We had sufficient liquidity, so we could grow our customer advances first time to the level of over 100 billion taka level. So our book is around 100 billion, across 105 billion taka in September, which is around 14% higher total deposit. And we had to do it because the margins were declining. So there was, to increase the profitability, we had no other option but to restore in lending. To support the growth, our deposit has also grown by around 8%, and it reached up to 80 billion taka. However, this was a balanced growth because the non-bank deposit has also grown by around 8%. For the next session, I would like to invite my colleague, Mr. Masid Karim Mojumdar, for the detailed analysis of our performance of Q3. Thanks.
Thank you, Javed bhai, and good day to everyone. So I will go through a bit details of what we have said so far. So if we see the year performance metrics on a consolidated basis, as you said, loans and advances grew 15% from Q3 2001 to Q3 2022. For the first time, IDLC reached 10,000 crore loan portfolio in September 2022. So despite the money market situation, IDLC able to book 15% growth in loan books. On the other hand, in deposit side, it also, currently it's 7,900, almost 8,000 crore deposit basket. We always say that our main focus is on retail deposit. So we don't want to depend on large depositors so that at any point of time we face any problem after repaying the depositor. So far, as the whole market knows, that IDLC never refused to pay back any depositor at any point of time. So though the loan book was grew by higher than the deposit growth, the deficit was actually managed from the refinancing scheme. As you know, IDLC is one of the largest recipient of refinancing scheme from Bangladesh Bank. So that's how actually we took the balanced growth in asset despite the lower growth in deposit basket. So and in case of portfolio profit and loss account, as our CEO and DMD has already explained the local operating environment, in such environment it's difficult to manage the profitability of any company operating in Bangladesh. Despite that, our net interest income grew by 13% compared to Q3 of 2020. It's because of asset growth. As our DMD has said, our margin has declined, but to achieve the higher volume, we have to book the asset book. So because of 15% asset growth, we able to have 13% growth on net interest income despite rate cap. I will explain later on. On the other hand, fees and other income decreased by 16%. As you know, the fees and other income comprises commission incomes from our capital market operation, IDLC brokerage. As you know, volume has decreased by almost 28%. So their main source of revenue is commission from trade volume. So as in the market as a whole, the trade volume has decreased, so their fees and commission incomes has also decreased. And investment income at the same time has decreased by 80%. In 2021, you know, the liquidity was enough and capital market, there was a bull run, and we took the opportunity and booked some capital gain in 2021 up to September 2021. But compared to that period, as earlier slide, our DMD has explained, trade volume decreased, index dropped, most of the stocks are in floor. So it's a kind of difficult year, I would say, to gain some, as IDLC is always in a fundamentally strong portfolio, underlying asset is fundamentally strong scripts. So for that reason, due to the capital market downtrend, IDLC were not able to book some capital gain in this year. That's the reason for a 10% decline in operating income, which was 5,618 million to 5,031 million. And this for the same reason, for fees and investment income, our operating profit has also decreased by 19%. On the other hand, in the bottom side, this specific provisions for loans and advances decreased by 44%. it's in 2021 till 2021 there were some Bangladesh banks directives in case of asset classification and revenue booking. So in 2021, though we wanted, but we could not declassify or downgraded any loans and stocks in our CIB reporting. But at the same time, at a prudent measure, IDLC management kept some extra provision that we identified that there are some accounts which might get deteriorated in 2022. That has happened in 2022 around, I can say around, actually I will explain later. So we in this quarter we have released some extra provision we booked in 2021. So on the other hand, provision for investment also, I mean, I would say that's the profit and loss and figure for last 9 months. We took 16 crore provision for 2021 9 months, but in this period, as few of the provision were taken in last year, for incremental basis, we had to took 12.4 crore provision for investment in capital market for consolidated basis around. So at the sum of all these things, as Javed said, our consolidated profit declined by 18%, and last year we reported 160 crore. This year it came down to 1,131 crore. So moving forward, we will say a bit details like interest income. As you seen, our net interest income dropped in Q3 compared to Q2, Q1, or even Q4 of 2021. The main reason behind the drop of net interest income basically for rate capping. As you know, the central bank has imposed the rate cap for NBFI as 7 and 11%. So there was not new loan, as the circular clearly mentioned that the applicable rate of maximum 11% is for existing loan also. So I can say around 2,700, I mean 27 billion or 2,700 crore amount of portfolio we had to downward reprice. So at the time of repricing, the weighted average lending rate for 2,700 crore amount of portfolio was 13%. We had to bring it down to 11%. So straight 2% missing from our existing portfolio. So as a result, the total half yearly impact is around 25 crore for this amount of repricing, downward repricing. And at the same time, our new disbursement also we are booking below 11, though we had some options for higher rate, but as due to Bangladesh bank restriction, we could not book at more than 11%. That's the main reason for drop of net interest income. On the other hand, operating income also dropped due to decrease of net interest income, decline of investment income, fees and other income. So this is the unique year, I would say, like IDLC is maintaining, I would say, a portfolio of capital market and lending business. And some year we do better in lending business, and some year we do better in capital market. This is the year for the first time, I would say. At the same time, both the market, I mean lending business and capital market, money market and capital market, both are in downtrend. That's the main reason for declining our profitability and other indexes. So at the same time, operating expenses grew by in third quarter. It's grew a bit higher than the usual quarter. The main reason is marketing and branding expenditure and higher our loan commission expenses. As you said, our loan book grew by 14-15%. We have to disburse higher amount for asset growth. So this portfolio disbursement commission expenses grew, and one of some capital marketing expenditure or branding expenditure has also booked in Q3. So usually it's hovering around 700 million each quarter. So we would say at that's the reason the cost income ratio should to 49% in Q3 to 2022. But overall, our cost income ratio is around 42% still now. So our aim is to keep capital cost income ratio below 42%. On the other side, the loan book declined by 5%, and balance sheet it was 114 billion, now it's 133 billion. The main reason is basically in 2021 we took some opportunity in money market for arbitrage. We arbitrage business, our treasury team has at the same time borrow from one institute and lend to other. Basically, due to money market operations, we took some advantages in 2020 based on surplus liquidity. But this year, as the the money market is tight, liquidity is tight, so we had to the opportunity of arbitrage businesses has gone down. So on the other hand, loans and advances for this quarter grew by 5%, which is around 10,000 crore for the first time in IDLC's history. So term deposit 8,000 crore almost, non-bank deposits. So on a balance sheet side, I would say we are doing better in balance sheet compared to our profitability. So if we go a bit details of our segment basis, our SME doing is fantastic. For this quarter, they grew by 3%. Their portfolio is 37 billion, and our consumer is 34 billion, corporate is 31 billion. Composition is almost the same as last year December. SME 37%, corporate 30%, and our consumer is 33%. So profit contribution, always we display this figure so that our viewer can assess from which company, how which company is doing good or bad. I mean, in financing business, I said this is the year in 2022, both money market and capital market are in downtrend. So as a whole, all the companies are doing not going up to the mark. So profitability figure has dropped for each company. IDLC Finance by 8%, IDLC Securities 18%, IDLC Investment 15%, and IDLC Asset Management is 123%. So that's a combination of 131 crore of reported profit for 2022 9 months. So as usual, we always disclose this to our investor or viewer or potential investor, that you might have in your mind that what is the status of restructured portfolio which we have given in 2020, 2021 and onward. So we are giving the status starting from 2020 at the time, the first time when we allowed the restructure as per Bangladesh Bank instruction. Our 45% portfolio was restructured, which is came down to 30% in December 2021, and which is came down to 20% in 2022 September. So the trend is showing that the restructured portfolio is going down, and we are managing very well. I mean, I would say at the beginning it was 41 billion, it's now 20 billion. So coming year we that is this trend will prevail and it will came down to normal state. So this was actually the restructured portfolio of 2020, and in 2021 there was another circular of 15% collection. You might have known the details of that circular. So at that time, 2021 December, we actually 700 crore amount of portfolio we restructured on the based on the circular. So that has also come down to 570 crore around, from 8% to 6%. So it is also declining. Hopefully, the way we are managing, monitoring, and increasing our collection effort, so we expect that in coming period it will further come down. So based on the above result, our return on asset is come down to 1.1%. It's a bit unusual. IDLC always portrayed 1.5 and above, but this is an unusual year, I would say. There's a reason it's dropped to 1.1% return equity, 9% earning per share for the quarter is 0.9. Book value per share is increased to 42 taka per share. Moving forward, I would say we are still well capitalized with adequate liquidity buffer. Our capital adequacy ratio is on a consolidated basis is 18.6, which was 18.3 in 2021. On a standalone or solo basis, IDLC's capital adequacy ratio is 15.4. So we are way above from our regulatory requirement. So loan to fund ratio is currently 87% as we are growing. So it's it's gone up to 87%. Last year it was 70%, and our regulatory limit is 95%. So NPL is slightly moving. I mean, it was 3.8 in Q3 2021. Now again it's Q3 22 is 3.88. So our collection effort is on. As you know, up to 2001, though we wanted to take some legal actions, we wanted to degrade some accounts due to Bangladesh Bank circular, we could not, and the legal action could not be taken in 2002 to 2020 2021. The court was closed due to COVID and other cases, but from 2022 third quarter onward, we are again we have increased our legal actions for those who are defaulter. So in that case, we can expect in coming period it might come down to 3.5 around at the end of 2022. So considering the current market trend and situation, operating environment, I would say 3.5 would be the good target to achieve for NPL ratios. So these are few financial highlights. There are few non-financial highlights, like IDLC Finance Limited was awarded Asia Money Best Bank Award 2022 as the best bank of SME in Bangladesh, and IDLC also has been recognized by the International IFC and SME Finance Forum as honorable mention in the Global SME Finance Award under the category of SME Financier of the Year. IDLC Finance Limited also signed an agreement, as I mentioned earlier. We are the one of the highest recipient of refinancing scheme. As many of you know that Bangladesh Bank has announced a 25,000 crore refinancing scheme for CMSMEs. So we have signed an agreement with Bangladesh Bank. The fund will be available for us at 2%. We will be able to lend it at 7%. So we can manage 5% spread on this refinancing scheme. So on the other hand, our structured finance department also signed few deals with multiple lending firms to raise a total amount of 9.6 billion. Moving forward, on the other side of our corporate social responsibility side, as you know, all IDLC is and always socially aware corporate citizen. So we always stand by our society. As part of that, we donated 10 sewing machine to Bangla Hope Orphanage at Bogura, and Aditya program you might have known. This is our 4th year. We are with Pratham Alo IDLC, Pratham Alo Trust and IDLC sponsor each year 10 students of Asia University for Human. And last one is IDLC Securities. Our brokerage company has relocated and extended the Narayanganj branch in 2022. These are a few non-financial highlights. So I request our DMD Javed Bhai to say a few things on our way going forward issues.
Thanks for detailing our financials. So what we are looking at going forward, as you are aware, the operating environment has become extremely challenging. The cost income ratio has also increased. It has become difficult to attract and retain talents with the kind of because of the competitive environment. So our objective going forward is to basically development of alternate channel as much as possible, along with digital products. As you are aware, the Bangladesh as a whole, the payment system has been made digitalized. We have multiple participants, and as also the smartphone penetration is pretty high. So the next objective is basically make an efficient channel through alternate channels and develop digital products. While as we have all know the economic uncertainty, what we're looking at to grow with our existing time-tested customer. Because it's difficult to book new customers in this difficult environment. We're really not sure how their book is. So our objective during this period, yes, we will continue our growth journey, but in a very cautious manner, mainly with our existing customers and whoever is driving the local consumption for 165 million people. So during the last 2 years, because of the challenging operating environment, the quality of loan book has deteriorated. You might have already noticed during our presentation of Masood Majumdar, as we are now basically focusing more on collection, solving the problem that has originated during this challenging operating environment. I would say I don't have the data, but I think that we are probably in top of the chart as far as the collection ratio is concerned. So it's no brainer that during this challenging operating environment, we need to maintain enough liquidity buffer just to make sure we grab all the opportunities and the confidence on us grows further. The capital market has experienced some turbulence, and given that we foresee that the liquidity situation may continue for some time. So our approach will be cautious. We probably will be focusing on pure investment strategy of being with the companies which has strong fundamental and long, and we probably will need to maintain a slightly bit longer horizon. Our community initiative, which Masood has already described, will continue, and tech and process improvement will also continue. So I think that's end of the session. Over to Rizwan.
And thank you, Javed Bhai, for wrapping up the presentation. Now we will move towards the question session. We already have a few questions. Our first question is regarding liquidity and money market condition. The question is, what is your expectation regarding the money market and liquidity condition of the coming quarters?
I would say this is dynamic, dynamic in a sense. If you look at the global liquidity scenario, it has all the governments to combat inflation is trying to dry up liquidity from the market, and Bangladesh Bank is not an exception. So we will closely monitor how things progress, but in general, probably we'll see the tightening liquidity scenario over the next 2-3 quarters.
Right. Our next question is regarding the specific provision. Our specific provision has decreased from 549 million to 300 million. Considering the macroeconomic situation, how this was achieved, or what is the reason behind it?
Majumdar, would you like to take this question?
Yeah, thank you. I would like to say something that, as I said earlier slides, that in 2021, due to regulatory circular, we were unable to report some classified account to the Bangladesh Bank, but as a prudent measure, we took the provisions in 2021, like in 589 accounts for 589 accounts, including local corporate, large corporate, SME, and consumer. We took additional provision of almost 32 crore in 2021. Of those accounts, in the recent 9 months, we have observed that around almost 160 1 crore, 61 million, which is in BDT, 16 crore amount of loan has been settled down. Either they have paid the full amount or taken over by the another client. And other accounts which we already downgraded as the circular is not there, they have downgraded as their actual status. So in 2019, 2022, we have taken provision for their actual situation in 2022. But the amount we have taken in 2021, that's where extra for these accounts. So we have released some from those extra provision. That's the main reason for decreasing the provision amount, incremental specific provision amount.
Right. Thank you, Majumdar bhai. Our next question is also on the line of quality of loan. NPL has increased to 3.88%, and the viewer actually understands that the NPL management can be difficult. His question is, what is our plan in the coming days, and how do we plan to manage the NPL?
With regards to NPL, I would say that for the last 2 years, we couldn't take any or initiate any punitive actions against the delinquent borrowers. The courts were closed. You might be aware that we have a large, almost 70% of our book is retail. If there is default, what we need to do, we need to take the recourse from the court. So since the court was not functioning for the last 2 years, we have piled up the NPLs. What we could see during this year, because of the reopening of the court, some of the accounts are moving, and what we would say, if the court functions like this, probably next 1 year or so, we will see a significant improvement. But however, because of the strong collection drive, we will see improvement in by end of this year.
Thank you, Javed bhai. Our next question is regarding our investment income. Investment income has reduced significantly in YTD Q3. What is your expectation in the coming days regarding the investment income?
When the operating environment is challenging and you have liquidity issues in the market, it's difficult to predict the investment income. So as we said earlier, that in the next 2-3 quarters, we foresee that the liquidity situation might not improve further. And what we have said in our way forward as well, probably will remain with the fundamental stocks and will take a longer time horizon. So I don't foresee the liquidity, the investment income would go down or go up quickly. So probably we'll have to wait.
All right. Our next question is regarding the cost to income ratio. Our cost to income ratio has gone up compared to Q2. How do you address this? Was there any special event or anything in particular that might have triggered this increase?
If you can take.
The cost income ratio has gone up to 42%. You know, there are two components for the cost income ratio. One is cost and one is operating income. So we are maintaining the cost at the almost same level or a bit higher than the last quarter, but at the same time, our revenue has net. I already show you that net interest income, investment income, commission income has gone. So the component of operating income has gone down. That's the reason for shooting up the cost income ratio, not because of any cost impact. It's a revenue impact. So we are maintaining our cost at almost at the same level or 5 to 7% growth from the last year. If the revenue grow, we are continuing our operational efficiency, focus on continuing operational efficiency and control our manage our cost in such a way so that we can arrest our cost income ratio at 42%. This level, 42 or 43% level. We'll be happy if it stand at 42 or below.
Right.
Thank you.
And thank you, Majumdar Bhai. Our next question is regarding the subsidiaries. Subsidiaries profitability saw a degrowth compared to Q3 of 2021. What might be the plan going forward? Is there any new product line or any specific plan?
With regards to subsidiaries, if we look at our subsidiaries, one is basically the securities, whose income is directly related to the flow of transaction at Dhaka Stock Exchange and to Chittagong Stock Exchange. So we don't foresee any significant uptick unless the market improves, the turnover in the market improves. So we probably will need to wait. Our plan is to basically maintain the profitability what has been achieved in Q3. So they have some money which they're basically investing judiciously, because in this difficult environment it's difficult to take higher counterparty risks. So we don't foresee any uptick in IDLC securities performance quickly. So with regards to the investments, IDLC investments, if there are more merchant banking activities, let's say the IPO and other things, probably will be able to earn fees. But again, during this difficult time, the number of IPOs will be lower. And since we segment the upper quartile, let's say the first 25% quarter of the market, so I don't foresee that their investment banking income from that investment activity will increase. So they have money which they're managing well. Probably that will give some money, but there will not be much uptick. Very recently, the company has taken an initiative to buy some companies or take stakes where they can find value. That is, we're looking for cheap deals. While we may take these cheap deals in the next 2-3 quarters, upside from these cheap deals will not be realized in the next 2-3 quarters. So it will take at least 3 to 6 years to materialize those investments. So yes, there are activities, but nothing in the shorter time horizon. With regards to IDLC asset management, they have mutual funds and venture capital fund. Good part is that for the mutual fund, despite having a lower market activity, the plan was to basically bank on the systemic investment plans. So the activities are at its full. What we have seen, the increased number of booking of new customers, and at the same time, portfolio or the asset under management of that company is also increasing. So we see with that new class, they have that mutual fund, they have Sharia fund, they have growth, and they have the balance fund. So they can play at different interest rate cycles. So we foresee that this particular company will gradually do well, even though the profitability contribution is lower. But if we compare to the Indian market, we have significant potential. We see that this company will do well, will continue to perform well, but with a much lower base than the two other subsidiaries.
Thank you, Javed Bhai, for summarizing the plans regarding subsidiaries. As of now, we have one more question. The question is regarding our portfolio growth. What would be your plan regarding portfolio growth in this difficult macroeconomic environment?
That all depends on how the money market situation evolves, because things are dynamic. Even though we plan to grow above the GDP growth rate, however, if the operating environment becomes more difficult, probably we'll need to be more cautious. However, we could see a double-digit growth in 2023 as well. And that again, that all depends how the money market evolves.
Right. Thank you, Javed Bhai. We don't have any more questions right now. I think we may proceed towards the closure of the session. Majumdar Bhai?
Yeah, I think we can.
Great. with this, we have come to the end of our session. Thank you all the viewers for staying with us. We hope to meet with you again in our next session. Thank you all.
Thank you.